Well, Scott, as you know, today is Valentine's Day, and I think there were some people worrying about a Valentine's Day massacre in the market if the inflation rate had turned out to be higher than expected. It came in pretty much with expectations, and I think that's why the market took it in stride. And I think we still have a moderating trend in inflation. Remember, the Fed is looking at the consumption deflator more than they're looking at the CPI. And that consumption deflator ended up last year at 5%. I think it's going down to 3 to 4% this year without a recession.
It's still slow and sticky, though, right? The decline in inflation, and maybe a little more lumpy than some would have projected not that long ago, thinking that might, as I was saying with Joe Terranova, that it would be more linear in its decline.
Yeah, I think linear is not necessarily the way it's going to play out. We're going to have, I guess, some bumps along the road, as the Fed chairman, Jerome Powell, called it. But all in all, I think that we are seeing certainly very strong disinflation in the goods part of the economy. Services, everybody knows the rent inflation measure has got some flaws in it. So we're all focusing on services excluding just focusing on services excluding rent. And what we're seeing there is the stickiness that you allude to. It's on a deflator basis, it's turning 4 to 5%. But I think it's going to moderate. A big part of that is transportation services. And I think that reflected energy prices, even though energy prices are not supposed to be in the service measure.
Right. But I want to get at this idea of a rate cut, which some have been hanging their hat on, you included, right? And Jeremy Siegel has been.
I haven't been there, Scott.
You don't think the Fed's going to cut rates down the road?
No, I haven't thought that all. Last year I didn't think it. This year, because I'm not in the recession camp. I've been in the soft landing camp. Now I'm wondering whether I should be in the no landing camp. But I didn't see any particular reason for the Fed to lower interest rates. I thought that they would take it up to 5.25%, and then they would leave it there. Look, I've been following the Fed's script. The Fed's December script was that they're going to keep the Fed funds rate, get it up to 5.1%, and keep it there through year end. I don't have a problem with that. And then next year is where they're talking about lowering it to 4.1%, and then the year after that to 3.1%. That's a very plausible scenario to me.